In today's Futures Trading Institutional Weekly, we're going to be doing something totally different. You already know what I'm going to show you today. You won't find anywhere else, and it's based on almost 2 decades in the institutional industry. Now, given the lack of economic data recently, we're going to be taking this opportunity to put things into perspective this week. I've done a nice little summary table that talks about the potential risks for the rest of the year. So it's an episode you don't want to miss. See you on the other side. Okay traders, here we are. This week, as I said already at the start, something completely different, quite exciting to look at things from a different perspective. We all know the week was very light on economic data, but we had some interesting moves, as you can see here. The whole week we sold off every single day. Now before we get into it, just very quickly, as I always say, yes, we're looking at the equity market here, but this is relevant to every market. As we know, crypto was off last week. Currencies obviously pared back a little bit. Crude held, but in general, everything you're going to see here impacts every single market. So very important, no matter what asset class you're in. So let's just get on with it really. As I said, last week we sold off every single day, which you can see here, down 1.69%. But what I want to do is I want to actually put things into perspective this week. Have a little, I guess, pit stop, and just take stock of where we are this year and kind of the risks ahead, because we are on the cusp of potentially starting to see some more volatility coming into markets this year. So it's probably a good idea to just have a little summary. To do that, let's actually just quickly have a look at what happened last week. As always, as I always do, just credit to my previous employer, Barclays, one of the best investment banks in the world, where I learned pretty much everything that I talk about in this video. So big props to them. So like I said, let's just get into it. It was a short week, so I've included Friday here, which was fairly flat. But then as we came into the week, first day of the week, Labor Day, obviously Monday we were closed, but Tuesday was off, Wednesday was off, Thursday was off, Friday was off. So I believe it's the first week that we've had an entire week of declines since February. So it's been several months. So worth taking note of, but was it overblown? This is what I talked about on the first slide. I said put some perspective around this, because ultimately, even though it looks bad, we're only off 1.73% from the record highs. So really, we're not off that much. And that's what I want to spend this Institutional Weekly doing very briefly, is just kind of putting things into perspective, right? So we don't really need to talk about economic data from last week, because there wasn't anything, right? There was obviously releases, but nothing that I felt the market was reacting to or was necessarily responsible for what we can see here, right? Nothing we can attribute any of these declines to, in my opinion. I think the market was just trying to take stock of some changing things that could potentially be happening in the background, which we're going to talk about today. So let's just get straight on with it. We've already summarized last week in terms of performance. It wasn't great, we already know that, but here's some perspective around that. Guys, you've got to think, and I hate trend lines, but end of the day, if we look at kind of, it's not a trend line, but just kind of direction, right? If we think of the direction that we've been in, if you look at all of these pullbacks, very, very similar in nature. This is over the last 1 year. Okay, you can see here, very interesting. It could just be another pullback before we head on higher. It could be that we go down. So we're at a very interesting inflection point, and that's why we're going to summarize the positives and negatives, the kind of risks to the upside and downside, and perfect time to do this, right here, where we're kind of at these type of areas where we've been pulling back to. And by the way, we haven't had a, this correction was just under 2%. We haven't had a 5% correction in, I think, over a year. So, you've got to put it into perspective. This could just be a minor blip before we continue to push highs. It could be the start of something bigger. But again, I just want to lay out the perspective here so, people get their bearings for the coming week. I mean, let's put things right here, right? I mean, 1.73% last week. You can see we haven't had an over 5% correction since last year, right? So it's been almost a year. Written it here, almost 1%. It's a 5% pullback. So we're going to look at that in a different format here. You can see that again. We're on track to match the longer stretch without a 5% pullback at the start of a bull market. So, and we're going to match that, unless we have a sustained sell-off this week, because we're only off around 2%. This is obviously going to keep going up and probably take that out in the next couple of weeks if we don't continue the sell-off that we had from last week. So that gives you some perspective, right? Not to get too carried away with the sell-off. Also, in terms of volatility, very, very interesting, right? We have seen very, very low levels of volatility this year, obviously, as the market has risen. But here we can see some slightly higher volatility going above 2% in terms of intraday volatility. We're starting to rise, and that's what I talked about last week. I talked about it in the Institutional Weekly last week. If you go back, I said that volatility tends to go up towards the final quarter of the year. Do you remember I talked about that? I showed you a lot of statistics about that. I also talked about seasonality in September being very negative. We're starting to see that, right? Volatility is starting to creep up. We are starting to see some seasonal effects coming into September. We're seeing this sell-off. Is it going to turn into something bigger? That's going to be so interesting to see. If volatility rises, if the market does start to have a pullback, why would we see some volatility? Well, this is where I want to just quickly take stock of kind of some of the risks which I've talked about. So what are the points of note? Well, we've talked a lot about the Delta variant. We know it's been impacting consumer confidence. We've seen that reflected in retail sales numbers being very weak, which we're going to again look at this week as well. We haven't quite seen people stepping out of their comfort zones and obviously spending as much as we thought they would in some of the more consumer-centric statistics. And then also we've seen payrolls very weak, tied into consumer confidence and COVID. Obviously the Delta variant has been impacting that. And we know that because I had it written down somewhere, but and see if I can just find it. But the payroll number was affected by, so I've written it down here, leisure and hospitality sector, right? Those are obviously very pandemic sensitive sectors. I haven't got the numbers written down, but I believe off the top of my head, they were adding 300,000 jobs per, is it per month? Yeah. In fact, I do have it written down. They were averaging 377,000 monthly gains over the previous 3 months to last month's payroll number. Suddenly went flat. So that obviously impacted payroll. So we're seeing that impact feeding into payrolls. However, what will be interesting to see now that the unemployment benefit expirations have come into play, I talked about that last week. COVID is potentially flattening out. We've had very high levels of daily cases in the US, but it does seem to be flattening out. So that will be very interesting to see. However, that's the risk, right? The risk is that the payrolls number comes in weak again. Risk, okay, potential negative. And then further COVID-related slowdown. So that includes obviously the payrolls number coming in weak. All of these things are very much tied in, you know. So we can see here, if COVID numbers continue to come in weak and affect kind of the economy opening back up, that's going to be a negative. We'll see that reflected in weak payrolls numbers, and obviously we've got retail sales numbers coming in. You're going to see the market is going to shift from a labor perspective into kind of inflation, and there will be retail sales this week as well. The positive is if the Delta variant starts to obviously come off, then more people will be getting back into work, which means that inventories, which I haven't actually written down here, I've written it there, inventories can then start to be built up again, which will obviously be positive. So just to kind of summarize, because there's a lot going on here, we've had kind of two big things that could be of risk going forward. Okay, so one is Delta variant, consumer confidence, which is going to feed into payrolls, right? So jobs, okay, and obviously that can impact inflation again, which I've talked about in last week's weekly. And then the other potential issue is supply chain disruptions, okay, which kind of ties into the jobs number because there is labor, but also inventory. We've seen this a lot. Companies have not been able to build inventory. That has kind of had an impact on GDP. Will that continue to be an issue? Okay, so if it is, the negative is if people don't get back into work and payrolls continues to be weak, that may have a spillover effect. Companies can't then build up inventories, corporate earnings could be hit. That could have a potential negative impact on the markets. Having said that, you know, schools are out this week. Like I talked about, unemployment benefit expirations, COVID could be flattening out. That could get people back into work. Positive is we start to build some of those inventories. So, you know, we're at that crucial juncture now. What's going to happen? I think most likely, and what seems to be the consensus in the market at the moment, is that these things here that I've talked about, so the potential payrolls impact and inventory, right? So supply disruptions, essentially. Those things are likely to be an issue in the near term, but resolve themselves in the medium to kind of longer term, so 2021. So I'm going to show you something. We've seen that. I've actually noticed that, and I found a nice little graph that reflects that GDP expectations are likely to, or have already been pared down by the street for 2020, but they've been pushed up for 2021. So it's not like these impacts are expected to have a permanent effect. They're likely to push them out. Does that mean we're likely to see some pullback in the S&P this year and then a continued push up next year? Who knows, but that seems to be the consensus at the moment. Inflation expectations continue to stay high. That's another negative that I just want to cap this off by. And it leads us into this week. So this week will be very interesting because we've got some CPI data, we've got retail sales, and then towards the end of the month, obviously in a couple of weeks time, we've got the payrolls data coming out. So that will start to really give us a good idea of whether we're going to fall on the positive side or on the negative side going into the rest of 2020. Still think the Fed is going to be tapering at some stage, which is not loosening monetary policy, but at least pulling back some of their asset purchases, which obviously is likely to increase volatility. So hopefully you can see why there's likely to be quite a volatile market now for the next month or two, whilst people figure out what's going on here on this chart, on this table. So we're just going to see this finally before we wrap up this GDP. Let me get rid of this mess here. GDP growth forecasts, which I've talked about just a couple of minutes ago. So can you see here, 2021 this year, likely to come off in terms of where we've been earlier this year, and then next year the consensus, people have been starting to push that up slightly for this, going into next year really. So you can see some of the gains here might be transferred into 2022. So that's ultimately what the street thinks. The risk is that that doesn't happen, which can obviously impact markets much more significantly than we're expecting. So you can see it's very interesting. If I just go back here, you can see a critical juncture here. We'll see what happens over the next few weeks with the data. Is it likely to push this down into 5% correction territory, or is this in line with kind of what we've been seeing here, and actually we're just going to turn around now and everything's going to be rosy going forward? So we'll have to see how the market reacts. Very, very interesting. And just to wrap up then, let's just have a look at the week ahead before we finish off. So you can see here, I talked about it already, focus shifts from labour to pricing pressures, CPI, which has been very resilient, hasn't it? And we're expecting that to continue, which should be interesting, really interesting to see how the market takes that. And then finally, because if that continues to be persistent, the Fed may have to start getting a lot more aggressive with some of their tapering. And then finally, retail sales, very, very interesting, because as we talked about, consumer confidence is coming off a lot recently. I've talked about it, so it'll be interesting to see. Obviously COVID cases as well, so lots to consider in the next few weeks. Hopefully that was useful. If you like institutional take on trading and you want to learn more about this stuff, I don't think there's any other way to trade, let's be honest. You can check out my completely free masterclass. Head over to www.g7fxfreetraining.com. You'll see the link below. Brilliant masterclass that I've put together. And then finally, don't forget to like and subscribe the video. Let me know in the comments if you find this stuff useful. It takes hours of research to put this together. I do it so you don't have to. You don't have to scramble around trying to find all this information on literally hundreds of websites, trying to find all the best bits. So hopefully that's useful to you. Don't forget to check out the free masterclass. Have a great week.